Hi there, you're watching Your Trades with me, Shreyanti Singh and Priyanka Uppal, and over the next half an hour, we'll help you make sense of the day gone by and trade. And what a day it was, right, Priyanka? In the morning, we were talking about the bear grip, and that really seems to have tightened its hold.
Sea of red only what we saw on the Indian market also, Shreyanti. Clearly what we saw that, fourth day of loss coming in for Indian markets also. Nifty, Bank Nifty, both started to trade with a downward pressure ever since they opened. In fact, they opened with a gap down only. Nifty has nearly lost 800 points in the last 4 trading sessions. Rupee was one big cue to watch out for today. Rupee hit another all-time low, breached 85 mark against dollar today. In fact, dollar index also is surging back again. The strengthening of dollar, negative for emerging markets, and of course, rupee weakness is positive for some sectors, but not positive for all the sectors at the same time. Dollar index rose to 108.27. This is the highest level in 2 years, and reasons are many. Fed's revised outlook for the rate cut. Then moving on, Trump's threat of higher tariffs. This is what seems to be, which appears to be weighing on the Indian markets. But nevertheless, let's talk about the sectors and spaces which lost the most of the ground today. Pharma was the only sectoral gainer which managed to close in green, and this is in continuation to what the moves we've seen in last few days for Nifty Pharma at least. Nifty Finance, Service, IT, Metal, these were the top losing sector. Heavyweights did not give any support. In fact, they dragged the index down. Reliance was down by 1.8%. HDFC Bank down 1%. ICICI Bank dragged by 2%. The other losers on the index were stocks like Asian Paints, Bajaj Twins, JSW Steel, Grasim. To some extent, from the mid-cap, the players like CG players, capital goods players like ABB, Cummins, they were the top losers. And realty space, which has been faring quite well from last few days, that one also lost more than 1.5% ground today and dragged majorly by players like Macrotech, Prestige Estates. So in overall, we could not, only the defensive players, the defensive bets like Pharma and back of the CDMO action, the CDMO players which have been quite in action from last few days. That was the same kind of trade what we saw today also, Shreyanti.
Well, absolutely, and a pool of losers other than the ones that you mentioned also, Priyanka, from the IT pack as well, HCL Tech as well as TCS, taking it a little bit easy at this point, and that's the sort of move that they went home with, cuts in fact that they went home with. Nomura, of course, upgraded Dr. Reddy's on the back of that. Like you mentioned, Dr. Reddy's was the one that was clutching onto that shade of green coming in. Zomato, of course. Now, the market cap soared above Bajaj Auto and Tata Motors, and on the back of that, you did have Zomato. Some profit booking, a tinge of red is what we saw at the end of the trading session coming in for Zomato as well. Other than that, of course, important to mark Kaynes Tech as well, because that's the one that is eyeing that expansion into semiconductor industry, something that we've been talking about as well. And that stock was also eking out gains to the tune of about 2% coming in on your screens as well. So those were largely the kind of stocks that we wanted to talk about, but it was, of course, IKS Health, and that's the one that listed at a premium of 43%, and over and above that particular premium that we saw coming in that listing price, it also eked out gains, went home with gains of just about 50% thereabout, and currently it ended the day around that 47% mark as well. So that's the kind of move that you saw coming in for Rakesh Jhunjhunwala backed IKS Health as well. Largely, that's the kind of handover that we're looking at. But with that, let's also take the conversation then forward with Kunal Bothra and understand what really this bear grip means and what lies ahead for us.
Well, I don't see that it's a bear grip, but yeah, I think it's been a sudden bout of volatility which had come back into the indices, and that was not a much anticipated event, and I think we've seen this so many times over the last 12 months of this calendar year, whether it's elections, whether it's budget, whether it's any sort of news flow regarding events regarding any policy update, etc., that the markets get into a bit of a jittery zone. And post the event, of course, if there is a negative impact like what we saw yesterday night with respect to the Fed announcement, the market reaction is negative. But then I think that settles down. So that settles down over the next couple of days. So my belief is that over the next 1 or 2 days, I would probably believe that the markets should settle back into a trading range. Now, the only difficult part was that earlier the trading range was at a higher point of 24,500, 700 for the index. We've drifted that lower by almost a margin of 500 to 700 points. And now we should be looking at 24,000 as a broad pivot for the index. So my belief is that over the next 2 or 3 days, we could get a lot more stock specific opportunities with the index getting into a range.
Okay, Kunal, what we've been seeing is that we have to, you have to set your expectation lower every day. Now we're talking about 24,000 as a point. Earlier, the resistance happened at 24,500, 200, 100, now to 24,000. How, till what levels are we vulnerable to? If 24,000 happens to be a pivot, what is the lower level that you keep as a crucial point, crucial support at this juncture?
See, for the calendar year, I don't believe that a retest of the 23,200, 300, which was made in the end of November, that would be retested. And on the upside, I've been maintaining this point over the last 2-3 weeks, even with the the extreme end of the market bounce, that I don't expect the index to scale past about the 25,000, 25,200 levels, at least till the end of this calendar year. So I think in that expectation, I would expect the index to, which has now moderated back again. So into this 1800 point band, if you're exactly into that midpoint range at 24,000 mark, we call this as a more of a balanced approach.
Okay. All right. In that, Kunal, what should be the approach now in case if viewers, traders looking for specific trades, what would be the recommendation from your side?
So I'll go with a contra buy, trade on LIC of India. That's a chart which has come back into a deep oversold territory at the sub 900 levels. So that's something which I would suggest as a buy. Would look out for targets in the range of 925 and stop loss could be kept at 880. And the second would be a buy on Abbott India. That's a chart which has confirmed a breakout, an extremely strong candlestick pattern seen today. So would look out for targets in the range of 30,000, stop us at 28,500.
All right, then a couple of buy calls coming in from Kunal. Thank you so much, Kunal, for joining us and helping us make sense of the day gone by in trade as well. Moving on, then let's get you some important commentary then. And the Wall Street continues to reel under pressure. What's left to understand is whether this is a move led by global weakness only, or if we're seeing a continued bout of consolidation. In fact, we do have Enam Holdings Sridhar Sivaram, who says that he expects the consolidation then to continue for another 3 to 6 months. Why is that? Let's go across and listen in to his rationale then.
The market will consolidate for another 6 months because there's a lot of bad news and uncertainty to digest. Earnings have slowed down. I think it's fair. I mean, I think it'll be a good thing for the market to consolidate here, and then as we digest earnings for the current year and then look forward to FY26, I think that would be a better position. That's our view, but markets always have a way to surprise.
All right, so market could consolidate for another 6 months. This is what Sriram is picking at this point in time. Moving on, rupee depreciation will continue. This is what Kotak Investment Advisor Lakshmi Iyer has to say. But she added that as the RBI sells dollars, it will not be as painful as what we are seeing right now.
RBI continues to sell dollars, and when you sell dollars, you try to support the rupee. And why not? We have seen the huge accretion in the foreign exchange reserves for India that clearly allows for the central banker to let go of some dollars from the war chest at times like these. So while I do not know if a 90 number would be doable through 2025, but if this pace of massive depreciation across EM continues, we will see maybe a couple of bucks more in terms of, today we're seeing the life lows in terms of the currency. Probably this could be just the start. Therefore, the next couple of months are going to be extremely critical at a time when the FPI flows also have slowed into the country. So our view is therefore that the near-term pain is likely to continue, which is something we've been stating for some time. But given that there is central bank activity happening in terms of selling dollars, the pace of depreciation could be a tad muted compared to the other currencies.
All right, then time for a very quick breather on the show. When we come back, we'll get you some more news and updates, so don't go anywhere. Welcome back. Thank you so much for staying tuned into your trades. Let's get you some news and updates as promised, and let's take a look at Dr. Reddy's Laboratories first. Went home with gains of just about 3.9% in trade. That was the one that was buzzing away in trade on the back of that Nomura note, where they've upgraded the stock to a buy rating from a neutral rating earlier and also hiked the target price. In fact, for the stock, we do have Varun who's standing by with more details. Varun, over to you.
Well, so Nomura has actually upgraded Dr. Reddy's to buy from neutral, and they have raised the price target from 1300 to 1500. Now they say actually the stock has underperformed the Nifty Pharma Index in last 1 to 2 years. They say that over the past 1 year, the stock has actually risen around 13% versus Nifty Pharma, which has risen around 36%. So the risk reward is actually very favorable. Actually, the street is pricing the contribution from Revlimid to decline from FY26, and this is one of the concerns because of which there is underperformance in the stock. But they say that the upside from GLP-1 biosimilar is not being factored in by the street for FY27 estimates, and hence they have upgraded the stock. Also, they say that their margin estimate are around 19.6%, which is much lower than peer, but again they expect the growth to accelerate from FY28. Also, they raised their target multiple from 27.5 times to around 32.5 times to factor in the rise in sector valuation and potential earning growth acceleration beyond FY27, and hence they have raised the target and also upgraded the stock from neutral to buy. Price target has been raised from 1300 to 1500 now.
All right, one of the top gainers on index was Dr. Reddy's. Of course, the kind of move we've seen from pharma space and coupled with the Nomura upgrade, that's what took the stock higher. Thanks very much, Varun, for explaining the entire rationale, what Nomura had to say on this. Gaurav is also standing by with a list of stock that were buzzing in trade. Gaurav, over to you.
SpiceJet was one stock which was in focus, and the reason being that company has cleared its dues worth $16 million with Genesis. With this, Genesis will be buying shares worth $4 million in SpiceJet at a price of 100 rupees per share, and SpiceJet will be paying $6 million to Genesis. And as a result, we saw a sharp spike in this counter. Next, let's talk about NTPC Green, because company has said that the second part of capacity of 30 megawatt out of 150 megawatt project, which is situated in Gujarat, is now commercially operational. Other than that, Zydus Life Science was also in focus today, and the reason being that the company has received US FDA approval for one of their drug. When we talk about this drug, the addressable market for this drug in the last 12 months was around $22 million. We also have United Breweries, which was in focus today, and the reason being that board has approved the cost optimization initiatives, and with this they are expecting 1.5 to 3% gains from the fixed cost savings for the company itself. Lastly, we also have Swiggy, which was in focus, and the reason being that JP Morgan initiated with overweight rating and a target price of 730 rupees. What they're saying is that the company is currently trading at a discount of 32 to 42% to Zomato, which is actually a very pessimistic thing to say in the market, and that is the reason why they were bullish about the company, and we also saw this counter gaining in trade today. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that we saw throughout the day.
All right, thanks Gaurav for that update coming in on the stocks that were buzzing away in trade. Tell you what, let's also take a look at IKS Health, because that's the one that made a bumper debut on the stock exchanges, listed at a premium of about 43% over the issue price of 1,329 rupees. Let's also go across and listen in towards Sachin Gupta, whole-time director and CEO, as well as Nitya Balasubramanian, who's the CFO of the company, then had to say about the company's growth roadmap.
By the next 10, 15, 20 years, we should be able to deliver growth that is far greater than the 12% at which the TAM is growing. And then you already know that we've established a unit economic model that is fairly strong and industry leading. And we believe that there is some more tech leverage to be had. We are transforming Acuity Margins, the company that we acquired last year. And so that's going to kick in as we go forward. And so we are fairly confident that over the next at least 3 to 5 years, earnings growth will be even faster than revenue growth.
And in terms of margins as well, we hope to touch a steady state of around the early to mid-30s EBITDA margins. With the Acuity acquisition, you'll note that our margins had come down because the acquired entity had a lower margin profile. So we will therefore be able to grow faster in terms of the bottom line. And once we hit that steady state, I think margins will probably stay at that level.
Right, this is the fourth IPO for this week. A lot of action from the primary market, which has seen a bumper listing. IKS, which listed today. DAM's also open for subscription this week itself. But moving on, let's talk about semiconductor space also. Jairam Sampath, who's the whole-time director and CFO for Kaynes Technology, he expects semicon business to generate 5,000 to 6,000 crore of additional revenue by FY30. Listen in as he shares his outlook on the entire semicon business.
Semicon and PC board are high capital intensive, and they probably can take us to some 5,000-6,000 crores of additional sales by FY30. We are putting about the capex about 3,400 crores. So this can probably at best yield a revenue of about 4,500 crores. So this year we get the POC line prepared, and then in the coming year, that is FY26 first quarter, we complete the POC, that's proof of concept. By fourth quarter of FY26, we think we will have some significant commercial revenues. 27 onwards, some better capacity utilization. So of the total capex, we are aiming about 25% of the capex on what is known as legacy packaging, which is the older generation of packaging. It's our belief that over time we need to move to advanced packaging. So a significant, or rather a substantive portion of our capex actually goes into advanced packaging machinery. So this advanced packaging is likely to kind of yield better margins and also probably keep us at the leading edge of the technology.
And that's the word coming in from the management at Kaynes Tech. Shifting focus then to Zomato. That's the stock that went home with cuts of just about 1% coming in. Market cap, of course, surpassed that of Tata Motors as well as Bajaj Auto. 2.8 lakh is the kind of market cap that we had coming in for Zomato as well. Now, of course, we at ET Now decided to take a look at what has been aiding the rise and the road ahead for the business then. Let's bring in my colleague Ashesha, who's standing by with just that roundup.
Well, yes, Zomato is clearly in the league of well-established and big players now. Remember, Zomato listed in July 2021, and since then, what a journey it has been. And market cap of Zomato when it listed stood at about 60,000 crores at the upper band of its price limit. And on the day of listing itself, because it listed at a premium, the market cap crossed 1 lakh crore mark. And today, the market cap stands at a whopping 2.8 lakh crores. This is higher than the market cap of several auto companies, the likes of Bajaj Auto and Tata Motors, whose market cap stands at about 2.5 to 2.7 lakh crores. Several other companies whose market cap is above 2 lakh crores includes the likes of Adani Ports, Trent, Coal India, Avenue Supermart, DLF, Nestle and Jio Financial. So Zomato has clearly entered the league of big and well-established profitable companies. Now let's have a look at how a journey of Zomato has been ever since it got listed. Remember, the upper price band was at about 72 rupees per share. It got listed at a significant premium. The stock currently trades at 280-85 odd levels. What a wealth creator the stock has been over the last 3 to 4 odd years. Now let's also understand what is really working well for Zomato. Food delivery business continues to remain very profitable and stable. Management outlook with respect to the coming couple of quarters also continues to remain strong. Blinkit offers generational opportunities, so several positives that are working in favor of Zomato, and the management guidance with respect to outlook is also very positive. They are penciling in 20% CAGR over the next few years. They say quick commerce can achieve about 4 to 5% EBITDA, and as far as the dark store addition target is concerned, that is also very positive. And the latest cherry on the cake is the entry of the stock in Sensex. Remember, it was included in F&O in the month of November this year, and now it will be included in Sensex with effect from the 23rd of December 2024. So several positives working in favor of the company, and the market cap has also crossed that 2.8 lakh crore mark, much above several other well-established companies.
All right, Ashesha, thanks very much for listing down several reasons that why Zomato is on a surge, and it's an unstoppable journey. It seems that the kind of move we've seen in Zomato in last 1 year. Thanks very much. Well, it's a wrap on this edition of Your Trades. Thank you so much for watching. Stay tuned to ET Now for more updates.